G'day and welcome to Talking Aussie Farming. My name is Jono Weinstock, your host from FarmCap, where we fund Aussie farmers and run a leading investment management business for investors. Now, today we're talking water. I'm here with Lachlan Campbell from Rivco, Executive Manager of Rivco, one of Australia's leading asset-owning companies in Australia. Lachlan, welcome to the show.
Beautiful. Great to be here. Thanks, mate.
Now, we met in Adelaide about a year ago at an Agribusiness Australia event at the wine
That's right.
venue, and we were talking water and had a great chat. So it's great to have you in town visiting from Adelaide in the studio in Melbourne.
Fantastic. Great to be here.
And I did ask you before what brought you to Melbourne today, and it sounds like you've got quite a few investors in Melbourne. Is that what brings you to town?
We do. Like, while we're Adelaide-based, a lot of our as a public company, a lot of our investor base is in Sydney and Melbourne. So I'm over here quite frequently catching up with them and touching base and seeing how they're going.
Now, water is a fascinating topic. I actually Googled water on the way here. It's not every day you Google water. It doesn't ask you whether you like tap or sparkling, by the way. I'll get that.
We're going to get a few dad jokes out today.
A few dad jokes. We'll get them out of the way. But it's a transparent, odourless and tasteless. Well, that's not true. There's all sorts of flavours these days. But a fluid essential for all forms of life. So I just found that fascinating. I think the only fluid essential for all forms of life is probably a nice cold beer after 100 hours on a hot day in the field.
That's fair enough. And I don't know if you've ever tasted river water, but it doesn't taste all that great.
Probably some odour too. But we are here to talk about a serious topic, which is water and the importance. And I just was blown away that, it's essential for all forms of life. So we can't live without it. The farmers need water to grow food for us to eat and survive. So what a very critical topic. So I'm very excited to talk today about, I guess, the economics of water. To start off with, do you want to just give us a bit of a background of your career, I guess, how you got to Rivco, managing water assets?
When you finish school, you don't typically decide that you want to go and, manage a portfolio of water licenses straight away. So I suppose how I landed there was finished year 12, didn't really know what I wanted to do, but knew that I enjoyed accounting, maths and economics. So naturally that then led me towards accounting of all things. So I went straight into did an intern or an undergraduate program at an Adelaide accounting firm. Did that for a few years, did a few more years at another firm, and then ultimately finished my chartered accountant's degree sort of in the, nearly 10 years ago now. Mm-hmm. And then moved into asset management, where I worked across a couple of different strategies. But really, I think the focus for me was always been water, especially over the last 5 to 6 years. But certainly having that accounting background has sort of held me in good stead for where I am today. And really, if I sort of look back and you sort of say, well, where does your passion for agriculture lie? I think certainly working on a lot of agricultural clients in sort of the early years of my career straight out of school, I found really interesting. Did quite a lot of work in the wine and viticulture space, and that sort of then extended more into horticulture, broadacre and livestock as well. So that's a little bit about my background.
Right. Now, Rivco is a business that's come out of Duxton, is that right? Do you want to just give us a bit of the history of how the water asset came out of Duxton? Yeah,
so Duxton Water Limited, or Rivco, formerly Duxton Water Limited, listed on the stock exchange in 2016. Originally, the business was managed externally by Duxton, the asset manager, and really over a period of almost 10 years, saw a lot of growth and, returns for shareholders are really good, but really built out Australia's only ASX listed platform where investors could get exposure to water as an asset class. So we then we got towards that sort of first 10-year term of the investment management agreement, which was ultimately terminated. And last year we went through a process to internalise the management team. So what that means is the business is no longer part of an asset manager, but it has its own staff members internally. So that's sort of what we went through last year. And as part of that transition, we renamed to Rivco Australia, which we feel is a brand that, fits really well within our universe and what we're doing. But really the core business, the same people are involved, the core business is the same, and we're still dealing with the same customers. So, beneath the surface, nothing's changed, although the business does look a little bit different outwardly now.
So now, from what I understand, you guys are managing close to $300 million of water assets, and that's all it does. Is it owns water assets, which investors can participate in the upside of the capital value, and also the income generated through leasing those entitlements. Is that?
Yeah,
is
that's
that right?
exactly right. So the core business itself is actually really simple. We buy water licenses from the market, and we lease those licenses to Australian irrigators. From time to time, we'll also do sale and leasebacks. So we might have a customer or an irrigator come to us and say, "Hey, would you like to buy, my water licenses in zone X?" And we'll say, "Yeah, absolutely. You're interested in a leaseback?" And they'll say, "Yep, I'd like access to these licenses for the next 5 years." And we'll sort of come up with terms in terms of what that transaction might look like. But really, that's a good example of a way that our products help customers we talk about unlocking balance sheet and providing sort of flexibility. So in that scenario, we're able to provide our customers with a capital injection while still providing them with access to the water. And from time to time, we'll also, offer options for people to buy them back at the end of the lease period, for example, or, a 5 year plus 5 year or whatever it looks like. So really for us, that's core business, which is, buying, leasing. And then there's also another component, which is more just selling spot water into the market or offering carryover products or forward contracts for customers as well.
Okay. Now, there must be a level of complexity. There's lots of dams, river systems in the Murray-Darling Basin, which covers, I think, 4 states. Is that right?
It does.
Much the predominant irrigation area in Australia. So I guess strategically, without giving away your IP, how do you, I guess, analyse which markets have opportunity to own versus lease in?
Yeah, it's a good question. About 1 million square kilometres, if you sort of look at the Murray-Darling Basin as a whole. It's interesting. On one hand, you can talk about the business model and how simple it is. You can explain it in 3 sentences, as like I've just done. But when you sort of look underneath the hood, there is a lot of complexity and there's a lot of data points that go into when you're looking at what the market's doing. And when you're making trading or investment decisions, everything we do is sort of backed up by data or modelling to sort of support how we manage the portfolio. But the system itself, you need to think of the river systems like natural infrastructure. The infrastructure's there. And obviously, as we know, the water, runs from north to south in Australia and then it exits down at the Murray mouth. Our portfolio is concentrated entirely in the southern basin, which sort of covers New South Wales, Victoria and South Australia. We don't have any exposure to Queensland water markets. But certainly for us, you sort of have to first of all take a position and say, well, what is supply looking like in any given season? And for us, when we're looking at supply, it's looking at dam storages. How much water is actually sitting in these physical dam storages? And maybe we can talk a little bit later in terms of how much water's in there today. But certainly dam storages is really important. Weather, get the crystal ball out. No one knows what the weather's going to do. I don't think there's no one else out there that can actually tell you, but you sort of have to take a view on some of these things. And then a lot of these data points flow into what the market price is for a particular asset or a particular allocation in a particular zone at any given time. So ultimately, you can look at all these data points, but there is a market. There is an open and transparent market that sits in the background where buyers and sellers are connecting and trading every day. And more often than not, you'll form a view on something using the data points you've got and you go look back at history and look at what's happened. But the market does the opposite. So it is a very tough market to operate in when there is so many variables, and in particularly, ultimately you're dealing with weather, which no one can tell you what's going to be doing.
Well, what I can tell you is it rains in October in cricket season in Melbourne.
Yeah, so exactly.
That's about
right.
it. We've missed too many games because of that. That's the only thing we do know. But now it's actually a relatively new asset class. Do you want to go into a bit of the history of how water markets came about?
Yep. So look, water markets have been around. Let's go start at the start. Water was first sort of separated in land in Australia about 50 years ago. And since then, over time, the market has continued to develop and mature. But really, we sort of talk about an inflection point from being 2015, 16 onwards, which is when we saw a lot of money coming from international pension funds. And really that was being invested into horticulture assets. So, we talk about almonds a lot. But what was happening is we were seeing millions or hundreds of millions of dollars of capital flow into Australian agriculture. But people would come down here and plant these assets out and say, well, great, now we need the water. Some of these big assets might need $2, $3, $4, $500 million of water licenses to be secure, or even up to $1 billion. You can't just buy that volume of water on the open market. So I think there was a trend that people picked up on pretty early on, and that was that water licenses were undervalued relative to the amount of capital that was flowing down here to Australia. So from 2016 onwards is really when we've seen the development and the maturation of water markets in Australia. Mm-hmm. And as we get through every month and every year, there's more data. There's more data to support how many crops are in the ground, what water allocations are likely to be for the next year, which ultimately informs pricing. So, and that's the other thing, we're seeing market participants be much more sophisticated today than they were even 5 years ago, which ultimately is a good thing for everyone involved.
That's true. I guess where farmers might jump up and down is where farmers aren't the owners of the water.
Yep.
And the institutions have come in and bought it and leasing it back. So, which I guess was a commercial opportunity and economics speaks for itself. So I guess how did that come about? And I guess out of interest, I don't know if you know, but what proportion of water ownership is from non-farmers these days, would you say?
Yeah, it's a good question. This is something that does come up from time to time. And the way that you sort of look at that response is, first of all, our $300 million portfolio, every single megalitre of that water goes back into Australian farming every single year. So our portfolio is still used. And if you are an investor in Australian water markets, you want to generate a yield or a return off of your portfolio. So therefore you do lease or you do sell your spot water back into the market every year. And ultimately the market is big enough so that anyone who is selling or is a seller into that market is a price taker. You can always negotiate, pricing around the fringes, but ultimately there is a price for particular assets or allocations, and we as an investor are a price taker. And I think in the context of how the water is distributed at the moment, or who owns water, you sort of look at the government owns about 25% of what's on issue. Mm-hmm. Now they've acquired that over the last 20 years, primarily through water buybacks, which we can talk about shortly. And then beyond that, you've got investors such as ourselves, and there's a few other groups that are out there as well. We're about 5% of the market, and then you've got about 70% is still owned by irrigators themselves.
Right. Okay. So that's a huge proportion.
It is. By far and large, the largest cohort of people that own water in Australia are irrigators or farmers themselves.
Okay. Well, it's good to hear the actual stats.
Yeah.
Now, what about talk about price and being a price taker? What are the key factors that drive the price? I mean, for someone who's not farming, not a farmer or in agriculture, you would think if it rains a lot, the dams are full.
Yep.
There's plenty of water to go around. Why isn't it free or why isn't it cheap? There seems to be a price floor irrespective. Keen to hear your thoughts on, I guess, the underlying factors that drive price.
Yeah, so again, it comes like everything we do in this industry is demand supply. When it rains substantially or it floods, like we saw in sort of 22, 23, we see dam storages fill up, and for that reason, the spot price drops down to, say, $50. There's times where that's a per megalitre of water, just to be clear. If you then fast forward a couple of years through some dry conditions, you see dam storages drop, that same megalitre of water could be worth as much as 1,000. So this is there is so much volatility in water markets, which is all driven by rainfall, which is something you can't ultimately predict. But that's why we sort of talk a lot to our customers in particular about having a strategy. Like we speak to so many farmers around the place, and this could be large family groups or small farmers right through to some of your larger farmers. But one thing that's clear is that not a lot of people have a water strategy, and ultimately there's a few different ways you can get water secure. One is you can own the underlying water entitlement, but there's a significant capital cost involved in that. Mm-hmm. Secondly, you can lease the water entitlement from a business like ours, and we'll typically look for a 5% rental yield on the value of whatever we're leasing you.
Yeah, sounds reasonable.
Which is reasonable.
Yep.
And thirdly is you can buy water in the spot market. Now, if you don't own your own licenses and you're not leasing any, that means you're taking spot price for the next 12 months.
Right. What's available today at a certain price?
That's exactly
which
right.
is driven by demand, whether the dam's full or not.
And as I've just said, that spot price can be 50, it can be 1,000. So if you have a few things go wrong on your farm in any particular year and you're fully exposed, it can be a pretty costly.
That's true. And we saw that during dry years with dairy, for example, in Northern Victoria. I think prices got up to $600-700. Up from $50.
Yep, that's exactly right.
And it became uneconomical, and dairy shrunk. Basically,
that's it. That's
exactly.
exactly
So that's
right.
the risk farmers take if they're not prepared to lock in. Short, medium, or longer term leases at a certain price. Which is probably a smart move. And I guess you guys negotiate leases with your farmers. Is that right?
Yeah, that's exactly right. But again, like, we don't say to people you should be 100% leased,
right? Because
ultimately we know it's going to be wet at some point, and the spot price will come down. So you want to be able to participate in that $50 water when it's
like
there.
choosing a fixed versus variable.
That's exactly right.
Yeah, I mean, on average, out of interest, what do farmers typically lock in versus, I guess, hope for the best?
It depends on the business.
Yeah.
Look, I know of some very large institutional level or grade businesses who decide that they want 100% exposure to the spot market.
Right.
And they take a long-term view that they want to take the spot market every year, and that they just have to weather the additional cost when it does
Must
go
be a
back to
high-value
dry.
crop, I'm guessing.
It is, high-value crops.
Almonds or...
Yep. On the flip side, there's other large businesses that look for a third. And I think that's a good starting point. Now, when I say a third, I mean a third of your annual water usage, or you own a third of your water requirement in licenses, you lease a third, and then you buy your last third on the spot market every year.
Okay.
As a bit of a top up.
Sounds like a reasonably sound.
It's a hedging strategy.
That's
right?
true. It is. Well, the other thing about hedging is if it's dry in consecutive years, I guess owning water is a natural hedge against growing a crop, and arguably against farmland value as well.
Yep. No, absolutely.
So I guess if you're an astute investor in ag, you'd probably want some allocation to
water
one way or another. I've got to say, in our journeys, we've seen some farmers where the land hasn't materially grown significantly, and the water's tripled, say from 3 to 9,000 a megalitre, and they've made a fortune.
Yeah, absolutely.
And a bit of a windfall.
Yep, absolutely.
Yeah,
and that's the other thing. We spoke about government buybacks before. The government over time has been actively acquiring water licenses back from farmers, and you don't have to go very far to find a farmer who's sold out. And part of that sort of exit strategy was selling their water to the government. Historically, the government's paid a premium for water licenses. So, I think that's exactly right.
Yeah,
water is so valuable now.
Buybacks are an interesting topic. There's winners and losers. From what I understand, the government's been trying to tread carefully politically around it and not wanting to flood the market to create too much noise with influencing price. But over time, they're kind of slowly acquiring water, and from what I understand, taking water away from the agricultural use and towards, I guess, natural conservation or environmental use. Is that right? I guess, what
exactly
kind of
right.
volumes are they actually looking to buy, and what impact do you think it's having on availability for farmers?
So I'll just sort of use some round numbers for argument's sake. There's about 10,000 gigalitres of water on issue in the southern Murray-Darling Basin. The government so far has bought back about 2,000 over the last sort of 15 years. And then they're looking at, you read in the newspaper about the 450 gigalitres, which is sort of their new target that they're looking at. Well, sorry, not a new target, but that's what they've been actively acquiring water for more recently. They bought back about 250 of that 450 over the last 18 months. And there's another couple of hundred gigs to go, which they plan on doing. The deadline is by 31 December next year.
Right, but it has to come from a seller, a willing
Has to come from
seller.
a seller. Yeah.
Right, okay.
So the way the process works is the government opens a tender, and anyone who owns water can log on to that tender and essentially submit, their volume of water for sale. And it's the seller is the one that determines the price that they're willing to sell for.
Right, there must be some opportunistic sellers, I'm sure.
There are,
Okay.
yeah, there are.
But and I can understand why farmers might find it frustrating taking water away and possibly increasing the spot price or the temporary price because there's water's a scarce
It
resource.
is.
X many megalitres in the basin, and they're being taken off the market, which benefit Australia in other means, but not necessarily for agriculture.
Yeah, that's right.
Obvious question: why doesn't the government build more dams or storage of water?
It's a very good question.
Right.
I think it's the capital cost involved in doing so. We're only having a conversation internally last week about what if the government built a new dam somewhere near Turrumbary and actually had another water resource that was able to be filled up, when there's high water flows. But I think what it comes down to is the capital cost in doing so. It would cost, X billions of dollars to do so. And there's not, to make that stack up in terms of, justification for that amount of capital expenditure, I think is tough.
Gotcha. Okay. So I guess that's a threat to the supply, to the availability of supply, which is probably a longer term risk for water. So I guess time will tell. But from what I can tell, there's no plans for significant investment in
That's
dams.
right. There was a project up in Queensland called the Hells Gate Dam that we were looking into. It was back in maybe 2022, 2021, 2022. It's about a $5 billion project sponsored by the federal government, and Labor put a line through that one when they came into office in 2022, I think.
Okay.
That was looking at essentially converting 50,000 hectares of cattle country into, permanent horticulture appropriate land, which would have, created so much more economic output for the system and farmers as a cohort. But ultimately, funding or support was pulled.
Right. Now, I'm not sure if it's controversial or not, but some farmers, I guess water goes to the highest economic value, essentially, or
highest and best use.
Highest and best use, like any other asset that's valued. Now, is it fair that a dairy farmer pays a certain price versus someone in horticulture and different types of commodities? So, and there are different price points and economics. So, if I was looking to go and start a farm today, wouldn't I try and get access to the best soil in a region with access to the cheapest water?
Absolutely.
And go from there?
Yep, absolutely.
Okay.
We've done a lot of work internally. Like we've put together a hierarchy. When I say hierarchy, I mean you got highest and best use up the top. And then we've looked at different commodities and sort of what the break-even point for water is for that particular commodity. Because as we know, the spot price gets up above 250, 300, the cotton guys stop. If it gets 350, 400, the rice guys stop. And there's obviously it continues to go up and up and up to the point where it doesn't make sense to grow a particular commodity in a particular year. Mm-hmm. So we've done a lot of modelling around that, and it is really interesting. But you need to also think about our whole system, our whole water market or in Australia is centred around highest and best use. Now, what does that actually mean? What it means is that every megalitre of water that runs through our system should be going to having, the highest economic output for Australia or regional communities as a whole. So that's sort of the premise that the system's based on. The fact, I wouldn't say that it's fair for one commodity, not another. But I think it is just important to keep in mind that when we've seen land use conversion take place from sort of 2016 onwards, where a lot of annual cropping land was converted to permanent horticulture, there's cycles to this stuff. And like, you see in agriculture where commodity prices of a particular commodity are strong, everyone goes out and plants that. It takes 5 years for those trees to grow. And then all of a sudden there's an oversupply in the local market because everyone's planted at a particular time. And then the price comes back down. So again, like almonds at this point in time have the highest ability to pay for water, or one of the highest, I should say. And that in the context of what we're talking about now is sort of seen as that highest and best use, because on a per hectare basis, they have a higher or a large economic output.
That's right. And in terms of water use, and I've done the economics on lots of crops. Well, almonds, how many megalitres per hectare would you say versus the lower users of say horticultural water use?
Good question. So look, almonds we sort of talk about between 12 and 14, depending on the season. Obviously, when water's cheaper, people can increase water at particular times of the year with a view to try and increasing yield. But generally speaking, we sort of talk about almonds being 12 to 14. You might have vineyards at around 7 to 8, and then you might have some other, citrus and, walnuts or some other different tree nuts that sort of sit between that, 8 to 10 mark. So that's sort of roughly, if you're sort of talking permanent horticulture.
Okay. And then you've got, summer crops.
Yeah, exactly right.
Well.
Yep.
Growing,
which are more determined, obviously, on an annual basis. When the supply's there, when people can make an economic return, they'll be planting.
That's right. So just, to put that into perspective, 1 hectare of almonds, if the spot price is, call it $500 a megalitre, that's $5,000 just for water, excluding other inputs.
Yep.
Noting that it can take 3 to 5 years before these trees start yielding profitably anyway. So that's a significant investment.
It is.
And so if the water's not there or available or price jumps, it's a huge risk.
Absolutely.
So it's about risk mitigation.
Yeah, and that's excluding the capital cost of actually buying the land and clearing the land and planting the trees initially.
That's right. Now, as a result of that, are we seeing investment in more almond trees going up in Australia? And is the market, can it handle it competing against the Californian predominant supply?
It's a good question. We've just done a piece of work on this actually, so I've got some of the numbers off the top of my head, which is good. But there is a really strong trend in California at the moment, which we think will continue to play out over the next sort of 20 years, where you've got decreasing acreage, in particularly almonds. So as it stands today, California grows about 80% of the world's almonds. Australia is about 11, Europe's about 8, and other is about 2%.
Okay. It's a significant player.
It's a significant player, and if you look at what's happening in California, so there's a whole different range of sort of basin or regions, counties, if you like, where almonds are grown at scale. The top 7 counties equate for 82% of California's almonds. That's 82% of 80%, if you're sort of talking on a global scale. And 5 out of 7 of those basin areas are in critical overdraft. Now, what that means is there was a piece of legislation that was introduced in 2014 called the Sustainable Groundwater Management Act, which essentially I'll oversimplify this, but draws a line in the sand and says from the year 2040 onwards, all of those different county areas are only going to be allowed to take out water from their underground aquifers in any given year, an amount that's equal to what's sort of the long-term average recharge. For argument's sake, Fresno, which is one of the larger areas in California, it's about 100,000 hectares of almonds. Australia's about 60 to 65,000, so it's a big player. The long-term modelling suggests that from 2040 onwards, you'll need to pull out 6 of your hectares to keep 1.
Right.
So there's a lot. This is what we think is coming down the pipeline.
That's huge. That's a 80% drop in supply in those regions.
Yep, that's exactly right.
Because they've been using up too much natural resource.
That's exactly right.
And the government's concerned that there's going to be a water.
Yep. Now these are areas where there's no access to surface water. There's other regions which are far worse than that, and there's some that aren't quite as bad as that. But what that tells us is that longer term, there's been about 100,000 hectares pulled out in California in the last 4 years.
Because of this?
Because of this, and we think that trend will continue.
Right, and the land value would have
the land value drops.
And now what's the highest and best use? Some other
right.
crop, putting some cows on it.
Yeah, no, that's right, because the water's not there. So we think
it's problematic if you're a landowner.
That's on the supply side over the next sort of 10 to 15 years. But you then look at the demand side, what's happening around the world. Well, global population is expected to increase by 25% between now and 2050. You've got rising average incomes of people in countries like China and India who can now afford to eat more protein in their diets and afford, healthy nuts as such. You've got decreasing arable farmland due to urbanisation. The one consistent thing in all of these trends as well is that they're not making any more water.
No.
So we have to find ways as a global population to continue farming, to grow more food without using any more water. So if you sort of zoom out and look at the macro story around, maybe it's almonds in Australia or water more broadly, I think there's some really positive trends that we'll likely see flow through.
There is, I guess. What's the alternative to almonds, right? I go to South Melbourne Market and plenty of options, and I've always got some nuts in the car somewhere, ready to go.
Yep.
But it's the ones dipped in chocolate, you pay a little bit more of a premium
exactly
for.
right. Yeah,
I guess there's
some muesli bars.
That's true. Well, there's always an alternative, right? And so the
Yep.
consumer might have to choose some other form of nut or or
walnuts is an
protein.
interesting one.
Yeah, they just don't taste any good.
That,
That's the problem.
Or pistachios.
It's just painful.
Like salty nuts.
That's right. Pistachios are good.
Yeah.
Expensive and hurt your fingers trying to crack them open. But
yeah,
I guess like any, I was at the supermarket yesterday and, my son's saying, can we get some strawberries? And I said, good luck if you can find some that taste any good.
Yep.
And we found some. They've come down from Queensland. You pay a premium. They're
Yep.
delicious, but there's seasonal issues,
Absolutely.
and consumers have to find alternatives.
Yeah.
If mangoes right now, you're not going to find any.
Yep. It's like when the cyclones come through North Queensland and the banana price, doubles or triples. It's part of agriculture. It cycles, right?
That's right. Yeah. Now, what about vines and wine? I guess given the significant drop of production, the industry's a little bit cooked. Use some Gen Alpha language in there.
Yep.
My son will love that. But how does that impact, I guess, these farmers with their use of water, and what's it going to if they're not planting or growing vines?
Yeah, there's obviously some some well-documented challenges in that industry. Between 2022 to 2025, there's been about a 14% reduction in vineyards in the southern Murray-Darling Basin. That was some work we had done recently. So naturally, that does free up some water naturally. So, we certainly had some conversations with some large wine grape growers, or we have over the years, where they're looking to do something with their land and production assets and or water. So I think the conversations first started out with, they need some cash for their businesses. What's something we can sell if we don't want to sell the land assets? We can sell the water. So that's when I sort of spoke about that sale and leaseback idea. So we've entertained some of those conversations, but what I think we're starting to see now is more, especially sort of more of your family farming businesses are looking to close up. Some of them are looking to close up shop. What does that look like? Well, they're selling land assets at bare land value. Some of them still have vineyards on them, but also building on from that, they're looking to sell their water. So I think that trend's been pretty prevalent in South Australia, and particularly the Riverland area, where we are seeing some South Australian water entitlements come to market, where farmers are ultimately looking to sell those and looking to sort of move on or plant a different commodity or do something else.
Okay. Has the price still stayed strong, or has there been an oversupply of sellers in those regions?
No, the market's pretty tight at the moment. I think where we sit today, like we're in a sort of a dry part of the cycle. Like dam storages are substantially lower than where they typically are for this time of year. And the outlook isn't looking that much better from a water supply perspective. So it's going to be really interesting to sort of see what happens in the next 12 months. But where we're sort of sitting today is, it's a bit of an unknown, but it could be pretty uncomfortable.
Yeah. Now, for young farmers trying to enter the market, it's hard enough to get your hand on some land, and then there's water as well, right? I guess the opportunity is that farmers can always lease water, and there's always availability of leased water, which is where you guys can come in and can mitigate risk. But look, and it's interesting, we're a lender, and so we lend against land and water. Yeah. So we're quite comfortable taking a risk on water. Yep. We're quite comfortable lending to a farmer who is leasing water. They don't necessarily have to own it as long as there's a clear strategy. And so we can forecast appropriately rather than rely on the spot market. So that probably backs up your point of the importance of strategies. If they want availability of credit, we've got to see a clear strategy. Not, I'm caught short. How do we budget for that? Well, you can, but it's going to eat into your margins. Whereas banks are a lot more conservative, and so bank lending want and prefer a predominant amount of owned to mitigate risk, which we can argue black and blue. I guess it's a capital asset as well, but I think it makes it harder for farmers wanting to expand,
absolutely,
and also for new farmers coming to market.
It's interesting, I certainly noticed something within the major banks, a shift maybe 5 or 6 years ago, where when you're going through an annual, facility renewal process, they typically want to see your 3-way financial model, or look at your P&L, your balance sheet, your cash flow. But there's actually that fourth statement, which is they want to see a 2-year water plan, and they want to know that you're covered, or what the idea, what your strategy there is. So I think, certainly I've seen in my experience anyway a lot more interest in water from the major lenders as well.
Look, and it's a solid asset class. It's going up. It can be volatile, but for the most part, I've looked at all the graphs in every zone, and it's pretty stable. Pardon the pun, but it's liquid. You've probably heard that joke a million times, but it's a lot easier to list it. I mean, you can see the market, in 2 clicks. Yep. What's selling, what's on the market, what's sold last month, and what's coming up. So it is easier to get out of a water asset than it is sell a farmland asset. So that actually makes it more attractive for a lender. And not everyone looks at it the same way as us, but we're very conscious when we do a deep dive into a zone to understand its history, where it's going, and what's driving it. Yeah. And then we have to, I guess, form a view on the farmers. Well, not only capability to grow, but again, what's their water strategy? Yeah. So, and I guess that's where you guys can come in.
Absolutely.
What kind of farmers do you work with? What kind of size and scale?
Yeah, farmers of all sizes. I mean, we've always supported the smaller, family farming businesses, or the guy or gal that's just trying to make a name for themselves, right through to the biggest Canadian pension funds or Australian pension funds who own ag assets, right through to your agricultural asset managers as well. So really our customer base is broad, and we deal with everyone, or people of all shapes and sizes.
Okay. And the future of water in Australia, it's gone through quite a few regulatory changes. You've been in the game for probably the longest out of most in the sector, over 10 years as a chartered accountant. You've seen the markets, through all cycles. Where do you think the next 10 years is going?
Yeah, well, there's definitely a few other old heads floating around who've been in the game for a long time. But look, I think, as I sort of alluded to earlier on, we saw a really aggressive price growth from sort of 2016 to 2022. Things have sort of moderated again. We think over time we will consistently over again, like any sort of commodity, there's cycles, but taking a 10-year view, we think water will be higher than where it is today, put it that way. You only have to look so far at the demand-supply mechanics and some of the modelling that's recently been done in the southern Murray-Darling Basin in particular, that's looking at crops in the ground versus supply under different climatic scenarios. We think those dynamics will continue to support price growth over time. Again, keep in mind that water is mostly owned by irrigators themselves. So I think the story is still there. It's still really strong. You will probably see some sort of inflation plus 3 or 4% perhaps in terms of capital growth. Going back over historically, we've seen 7% compounding since 2007. So it's been a really strong performing asset. I wouldn't be able to say I won't be able to say if we're going to do that again. But certainly I think water will continue to play a role in Australian agriculture. And I think, in terms of the product, ultimately the products that we offer are helping to provide Australian irrigators with choice and flexibility when it comes to managing their water. So I think, we'll continue to see a strong demand from our customers looking for water security over the next 5 and 10 years and beyond.
Okay. And I guess, your fund has an diversified allocation in different regions, so you can, I guess, manage your risk accordingly through owning assets in different zones, which is clever. So I guess if you're investing in agriculture, it just makes sense to have a hedge and some kind of participate in the water markets. Yeah,
that's it. We own about 20 different water licenses across all the different states and the different catchment areas. I think the most important mechanic in terms of how we set our portfolio up is that we have about 20% exposed to general security. General security licenses typically receive water allocations when it's wet or average to wet. For us, that's a natural hedge again. So like anyone managing an equities portfolio or managing a portfolio of investments, diversification is really important. So we look at that on 3 levels. The first one is general portfolio diversification across different zones. Secondly is high security versus general security. And thirdly is leases as well. We want to broaden our lease book so that we're not overexposed to a particular commodity or a particular region or a particular counterparty as well.
Yeah,
and we think that if we get all of that right, the business should be well placed to continue to perform.
That's true. I mean, there must be the odd farmer who fails to meet their monthly obligation from time to time. So you want to manage that risk, and locking in too long term, you're unnecessarily offering something at lower than maybe it should. So I guess there's a lot of strategy behind your
there is, and look, we've certainly had farmers come to us from time to time and say, hey, we need a little bit of support through the next 3 or 6 months, and we've always tried to do what we can to try and help people through the challenges that may arise naturally when they're running a business.
Yeah, and it's interesting, looking at high security versus low. Low might cost 80% less than high, and still get the same allocation.
Exactly right.
But then when it doesn't rain, you get zero.
Yeah.
So that's the risk you run.
Yep.
So I guess as an owner of water, it would make sense to hang on to both.
Yep.
It just gives you, you might get lucky, but you're running the gauntlet if you only own low and not high.
That's exactly right.
Yeah.
Low security or general security entitlement owners from 2021 to 2024, those entitlements performed exceptionally well.
Yeah, that's right. Now, outside of water markets, let's talk farming regions. You've probably travelled all parts of the 1,000,000 kilometres of irrigation. Seen some stunning farmland. Which regions catch your fancy?
Look, I think anywhere along the river. I think certainly Northern Vic certainly is pretty special, and we've got lots of customers up there, so we get out and about every now and then. We're only out in Mildura and the Riverland, a couple of weeks ago, getting out to see people and see what they're up to, and just sort of get a sense of what's going on at a ground level. But certainly I reckon Northern Vic or the Riverland in South Australia.
Okay. And what crop, if you had an open checkbook, what would you invest in now? What commodity and what region?
Oh, it's a good question. I think I'd be going almonds. Again, for the reasons I've just spoken about, I think we're pretty bullish on almonds long term. And where would I be doing those? Look, I've probably got a natural bias towards South Australia. But if it wasn't in the below choke Murray, which is sort of where a lot of the almonds are, potentially even looking for other areas outside of the lower Murray where you can still get, you get cheaper access to water. I think there's pockets where there's a few people doing some pretty interesting things where they're sort of thinking outside the box and doing stuff that not everyone else is doing. So I'd like to do something a little bit more creative and potentially do something in an area where there's not a lot of activity.
Okay. Favourite country pub or two?
Favourite country pub or two?
Or three?
The Prairie Hotel rings a bell. Parachilna, just outside of the Flinders Ranges.
Okay.
It's always, a good place to stop for a quick beer when you're, coming in or out of the Flinders Ranges. I reckon that's probably my go-to spot, I reckon.
There you go. Sparkling or tap? Probably get that asked all the time.
Oh, I knew I was going to get this question. Tap, still water for me. I love cold still water.
Right.
Yeah.
Very good. Lachie, thanks very much for coming on our show. It's been a really fascinating chat, doing a deep dive on water. Let's stay in touch, and hopefully I'll see you in Adelaide again coming up at the National Agribusiness event.
Yep, beautiful. Thanks, mate. It's been great to chat. We'll catch up soon.
Pleasure.